So co-ownership, co-owning property, whether it's individually or with a corporation or an LLC, can be owned as follows. Tenants in common is the default. So if A and B own the property, they are tenants in common. Now, you also have what's called joint tenants, and joint tenants have a right of survivorship. Different though with corporate entities. I'm talking about individuals have a right of survivorship. So if A and B own a property together and nothing is stated on the deed other than, from grantor to grantee A and B, it's presumed tenants in common. If it says to A and B as joint tenants, then those joint tenants have a right of survivorship. This is a little off the topic because that deals with estate planning, but just to make sure you'll understand that if you say to A and B, it's tenants in common, that means if A dies, his share goes to his estate. Whereas if A and B are joint tenants, A dies, it automatically goes to B. Even if A has a will that says, I give it to C, it doesn't matter. Just FYI, if you didn't know that in your estate planning. But most we're going to talk about is tenants in common or co-tenancies. We can do a co-ownership through a trust, through a land trust. Okay? A co-tenancy is a form of ownership whereby the participants hold what's called an undivided interest. Undivided not mean like you own the front of the property and I own the back of the property. Undivided means we all own the whole together, rather than each holding separate identifiable portions of the property. So if A and B are tenants in common, they both own the whole. I know that's kind of hard to understand. Like, well, that's my half. No, that's your half. No, you get the upstairs, I get the downstairs. It doesn't work that way. You all have the same ownership to the property. So each co-tenant is entitled to the equal use and possession, which is known as unity of possession. It means both parties have the right to possess the property. Not necessarily up and downstairs, but all of it. You both have the right of possession. In the absence of an agreement, which is another way of saying an agreement can change all this, in the absence of the agreement, every co-tenant has a right to receive a proportionate share of their ownership as profit. So if A and B are just A and B, it's presumed 50-50, right? So A would get 50% of the proceeds on sale and B would get 50%. If it says on the deed A, 30% as tenants in common with B, 70%, then it's 30-70. Does that make sense? But an agreement can change that. Unless contractually stipulated, co-tenants have no obligations to fund any portion of the costs, which is different than a partnership. Okay? Different than a partnership. Now, technically, a co-tenancy is not a partnership at all. It's just a form of so-called joint venturing, although it's not technically really a partnership animal at all. So some of the pros and cons of co-ownership. A pro is it's not a partnership. Now, the good part of that is that means you don't have to file a partnership tax return. If you have a partnership, whether it's a JV, short-term or long-term partnership or an LLC, you've got to file a 1065. That's a partnership tax return. And each partner, or in the case of an LLC member, would get a Form K-1, which is their share of profit or loss for that year. The individual then takes that K-1 and writes that number, profit or loss, on their personal return, okay, or if it's a company that's receiving the K-1 on their company return. All right? So in a partnership return, you're not reporting your half on your return and their half on their return, but in a co-tenancy you are. Does that make sense? A co-tenancy, you would just say, well, my half of the profit, I'm going to report on my return, and your half of the profit, you report on your return, which is infinitely easier, isn't it? It is. Okay? Another pro is it's simple. Another pro is you don't owe a fiduciary obligation to co-tenants, whereas partners, you owe them a fiduciary obligation. Now, what the heck does that mean? That means higher level than just a normal responsibility. A fiduciary responsibility means you owe someone a much higher duty of care, a much higher responsibility than an average person. So A real estate broker has a fiduciary obligation to their client. A trustee of a trust or an executor of a will has a fiduciary obligation. Okay, that's a higher standard. It means if you screw up, then there's not a lot they have to prove. It's a much lower burden for them to prove that you did something wrong. Whereas a co-tenancy, there's no fiduciary obligation to a co-tenant. So they have to prove something really bad that you did in order to hold you liable as a co-tenant. Which could be, that could be a pro if you're one of those, but if you're the one who got screwed, maybe not. So the con is it could potentially be reclassified as a partnership for tax purposes. Now, what does that mean? That means the IRS is going to come back and say, well, that you should have reported that on a partnership return. Now, they're not going to get any more money out of it because whether you, a partnership is a pass-through entity. So if you were co-partners 50-50 and the profit was X and you got half of that, you'd report half of that on your personal return, right? If you were co-tenants and you made X, then you're going to have half of X. It's the same numbers the IRS is getting. But if you got a stickler from the IRS who wanted to make a big stink about it, what they're going to do is they're going to get you on non-filing of the partnership return, which is hugely expensive. The penalties, the fees, they add up, and that's where it could be a little bit troublesome. My experience is that the IRS auditors tend to leave stuff like that alone because they're not really getting any more money other than the fees and penalties for non-filing. Okay, unless it's clearly a partnership and you didn't do it. Okay, but on the fence, they won't make a big deal out of it. Another con is co-owners must take profits in proportion to their ownership, meaning you can't have what's called a preferred return or a special allocation. Now, normally in a partnership between A and B, or A, B, and C, whatever, if we have A and B, and A owns 50% and B owns 50%, then the profits are 50-50. But we could say in the partnership agreement that, well, A gets 80% of the cash flow, and at the end, C gets 70% of the profit. You're allowed to do that. Preferred returns, special allocations, where you can, push the profits or losses in different directions, different proportions. In a co-tenancy, you don't do that. It's you own 50, you get 50. Does that make sense? Unless you, in addition to the co-tenancy arrangement, you had a partnership agreement that laid that out. And then it's not a co-tenancy anymore, it's a partnership. That's right. You can do co-ownership with a trust. So a property would be titled in a land trust. The co-owners are beneficiaries, and they can be beneficiaries as tenants in common or beneficiaries as joint tenants. It can be either way, because it's the beneficial interest in a land trust is personal property. So you can own it jointly as co-tenants or as tenants in common, but usually it's tenants in common. In addition to that arrangement, now you'd have a trust agreement, right? The trust agreement would say who the trustee is, and let's say you picked the third party, or maybe A or B was the trustee, okay? There's a trust agreement between the parties that says who is the trustee, what are their authority, what's their authority, what's their rights, what's their duties, what's their obligations, and the beneficiaries, what's their rights, duties, and obligations. Right? So that spells out some of the relationship. But the rest of the relationship can be also added upon in what we call a co-beneficiary agreement, which is very similar to a joint venture agreement. But instead of saying joint venture partner 1, partner 2, it's beneficiary 1, beneficiary 2. In all other respects, it reads pretty much the same, except the fact that you're not co-owning the property, you're co-owning the trust that owns the property. Does that make sense?